Good to see you guys again. Welcome to SimpleChew. I'm your host Hank. In today's video, we're gonna go over the filing requirements. In general, the Fed and their laws require that any U.S. citizen or U.S. residents to report or worldwide income. This is for taxpayers that are required to file U.S. income tax returns. So, who are the taxpayers that have to file their tax return? That's a question we are going to go over today. We're going to go over gross income. So gross income is broken into two types of income, which are earned income and unearned income. As you can see, I have a small formula in the PowerPoint presentation, and that formula is not going to mostly fit everybody's tax situation, but it's a small sample about gross income and how it's calculated, and depending on your situation, how you can add them and also subtract them, and what is considered a gross income. And that I just want to make it easier for you guys. One more example is some taxpayers may only have earned income, and other taxpayers might only have unearned income. But regardless, everything equals gross income to the Fed. That's what's the law according to them. As we can see from the PowerPoint that I created for you guys, earned income includes anything that is taxable. So anything that is like taxable scholarships or fellowship grants or any professional fees. Also, if you're getting tips, if you're in doing those type of jobs in restaurants, and of course wages and salaries. That's if you have any type of regular job, 9 to 5. That's going to be included on income. If you think about it, the word almost defines what it is. If you kind of hustle for the money, the type of money, is going to be considered earned income. If you go on the other side of the coin, unearned income, anything that has to do with capital gains or dividends or taxable interest from CDs, bank CDs, anything that has to do with taxable pensions, also security, social security. If you're disabled, if it's taxable. Also, any unemployment checks, that's going to be taxable. It's basically any income that pretty much didn't put any muscle to it. It's basically unearned income. The Fed requires that taxpayers meet certain thresholds, though, with their gross income before filing any tax returns. If the taxpayer does not meet the gross income thresholds, they don't have to prepare any tax returns for the year. So you don't have to do any 1040s at the end of the year. You can see from the table that I have created for you guys, any filing requirement is based on income, filing and status, if you're single, and also age. So depending on your age, filing requirements for taxpayers are different than filing requirements for dependents. That is something that I will go over with you guys on the next video. One example that I want to give you guys is in this slide is that we can see that Christina is single, younger than 65, and she's not blind. We see that her earned income is $12,400 and her unearned income is $600 from capital gains. She has some stocks. Because the capital stock for the capital gains are unearned income according to the definition of gross income. Her gross income total is gonna be $3,000 because we're gonna be adding the the $12,400 plus the $600 of capital gains. And when we see the table, we see that she's single, she's younger than 65, and she meets that $12,550 threshold. So at the end of the year, she will have to file her tax return. That's gonna be most of the people who are working, and maybe they have a couple some capital gains on the side. That's gonna be your guys' example. The second example, it seems like we're using the same details. We're using the same amount for her earned income. She probably has a job, but this time she only gets dividends and totaling $100, and that's unearned income as the definition that we have clarified from the first slide. So we have earned income of $12,400 as the same, and we have added the unearned income of $100 from our dividends, and that only equals $12,500. as her gross income. And when we go back to the table, we can see that with the same details, with Christina being single, younger than 65, we can see that she does not meet the gross income threshold, so she does not have to do her tax return. So thank you guys for watching the video. Hopefully that was helpful for you guys, breaking down gross income for you guys. Is something that we're gonna start slow from the beginning, and then I'm gonna break it down more thoroughly with dependents on my next video, and then we're gonna go on taxes, credits, and all that. So thank you guys for watching, and always remember, guys, to keep it simple.